Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at VIX and the indexes and the ETFs. Alright, so first up we're looking at futures here, and as you can see they're pretty much flat here with the Dow trying to find support, the S&P 500 trying to find support, NASDAQ as well, and the Russell 2000. As you can see over here, the VIX is down on futures trading, and so it's under a little bit of pressure. You can see it's had this uptrend with the green, red, and so let's take a look here at the chart. So first up, the volatility index. Closed up 25% today. This was a huge move, giant move today. As you can see here, it got back above that 50-day simple moving average. That's the green line. That's the key level to turn into support at 1422. It's hitting the 100-day simple moving average at 1741 at the close today, and that's the big level to break. It needs to get above that gold line and turn it into support to head higher. It pulled back. When I wrote this down, it was at 1580 in futures trading, and so it's going to be all about breaking this gold line. You can see it hit that level in May and failed to break and pulled back, and so the big level to hold is down here, the 50-day simple moving average at 1422. The big level to break is 1741. Okay, you can see MACD is trying to heat up down here with the bullish crossover. You've got the PSAR bull flip. You know, it's going to be all about breaking resistance for the volatility traders. If you look here at the VXX, you can see here that it closed above the 50-day simple moving average and the 200-day simple moving average today. Those are the key levels to hold. They're currently here at what is this? Basically 37, 37 here. 36.95 is the 200-day simple moving average. So if we could stay above 37, that would be bullish. And then the next key levels to break are up here at the 100-day simple moving average at 40.67 and the 300-day simple moving average at 42. So yeah, there was a close last week above the middle Bollinger Band. That was a signal that was heating up, and then today there was a push back above that level. So if that middle Bollinger Band currently at 33.66 turns into support, a new uptrend should begin. Now if it drops back below that 50 and 200-day simple moving average, that would be a red flag. That would be a signal it's cooling down, you know, consolidation. It wasn't ready to head higher. Okay, let's look at UVXY. That you can, you know, this is the way to trade options, volatility options, as well as VXX. But you can see here that there was a really strong close today above that 50-day simple moving average. It did pull back, forming an upper wick on the candle. It needs to stay above 1252. You know, if it opens below that level tomorrow and that 1250 level turns into resistance, then it could come back down here and test the middle Bollinger Band, currently at 1083. It needs to hold that level to get a new uptrend going. You could see it tried to hold the middle Bollinger Band in May and pulled back. You know, if it fails to hold that level, that would be a red flag. Now, if it stays above that 50-day simple moving average, the next key levels to break are going to be the 100 and 200-day simple moving average up here in the $15 resistance zone. Notice the big volume spike today. So that was a big volume, you know, coming in on volatility. Yeah, huge payday for options, for call options today. They're paying off really big. So congrats everyone that was able to jump in that at the open if you weren't in that from last week. Okay, so let's look at TVIX here. So this did close up 29% today. It closed right below the 50-day simple moving average, currently at 56.19. Okay, so now this is after the reverse split. The numbers are much higher now. Now it's all the way up at, you know, now it's at, you know, the value per share has gone up dramatically. Now one share is at 56 dollars a share, and it's hitting that 50-day simple moving average at 56.19. If it can get above that level tomorrow, then we'll be looking for a run up there to that 100-day simple moving average at 72.65. Now, if it fails to break above that 56 resistance zone, then it could come down here and retest that middle Bollinger Band all the way down there at 45.46. You know, same story here. It got above the middle Bollinger Band, it failed to hold and continued to pull back, and so it's trying to get a new uptrend going. You know, the last time time it really got an uptrend going was back here in March, where it got above the middle Bollinger Band and it ran up to the 200-day simple moving average. If you go back here in January, when it got above the middle Bollinger Band, it ran up to the 200-day simple moving average. So if it follows suit, that 77.48 level would be the eventual target if this new uptrend continues. I mean, look at that volume today. I mean, giant volume entered the trade today. So we'll see if that's enough to push it higher or if it's going to stall out here at this key resistance level. Okay, let's look at the Dow Jones Industrial Average. It closed down 322% today, or it closed down 328 points today, down 1.3%. Now it was down much lower on the trading day. I think it was down 450, 500 points on the low of the day. As you can see, a long lower wick formed on today's candle. It did close below that 200-day simple moving average. That was something we were watching today. Currently at 24,280. That does signal downside risk. It closed at 24,252. As you can see here in April, when the 200-day simple moving average, the red line was tested, it bounced off that level, and then it rebounded and ran up to the 100-day simple moving average. In May, it bounced off the 200-day simple moving average. Both times it closed above that level, and it ran back up to the 100-day simple moving average. And now this time it's bouncing off of that 200-day simple moving average zone. It's trying to, but it closed below. This is a bearish change in trend from the last two times. Is this level going to turn into resistance? If it does, then you could retrace down to that 300-day simple moving average. That would be the downside risk. Now it's right there on that line. If it gets back above that 200-day simple moving average, that was the reload zone the last two times. If you loaded off the 200-day simple moving average, that paid off nicely. There were big runs each time. Now, is that going to happen again? It all depends right now on 24280. Above that level signals upside potential. Below that level signals downside risk. The first step is going to be, besides breaking the 200-day simple moving average, is breaking EMA4 at 24485. Notice the candles are right in that pink line lower. If they continue riding EMA4 resistance lower, it's going to signal more downside risk. So SDOW, has been returning really big gains down. It was up another 4% today on the big drop for the market. This was alerted in our chat back here when it got above EMA4, and it's just been in the strong uptrend. If it keeps riding EMA4, I mean, the signal is that the stock's still in play with a strong uptrend, and it signals more upside potential. Now it got above the 100-day simple moving average at 1838 today. That was the level we wanted to see break. If it stays above that level, that's going to signal it wants to head higher. It got above high close here from this closing price on the 29th. It needs to stay above. If it were to drop below that 100-day simple moving average, then it could continue consolidating to the upside. You're looking for a run up here to that 1920 or 1980 level, and then you have the 200-day simple moving average up at 2022. Just right now, as long as the EMA4 at 1828 is holding, that uptrend's intact. If it were to drop below that level, that'll be your signal it's cooling down, similar to right here on this candle. It's up above, and then it cooled down, cooled down below EMA4, gets above, it's heading higher. And so if you look at the 15-minute chart for SDOW, it did close below the middle Bollinger Band. If that middle Bollinger Band on the 15-minute chart at 1888 turns into resistance, it could drop down here to the 50 simple moving average at 1841. All right, it did bounce. Check out the huge volume in the close, and so we'll see here if it's going to continue this uptrend. If this was just a little shakeout at the close, a little short cover rally, or if it's going to be able to get back above that middle Bollinger Band and get a new uptrend going. It's going to be all about breaking this 1910 resistance zone. So keep an eye on UDOW, UDOW. This is the Ultra Pro Dow. It's basically if the Dow is bouncing, this would have a nice reversal. Right now, it's trying to turn this middle Bollinger Band into support, currently at 84.13. If that level holds, a new uptrend, could get going on this chart, but it has to get above the 50 simple moving average at 86. It has a lot of work to do. If it were to drop below 84, that would be a red flag. It's trying to bounce here. We'll see if if SDOW is going to continue higher, or if it's going to stall out and UDOW is going to get a turn this week. Okay, if you look at SPX here, this is the S&P 500. You can see it pull back big time. And what I wanted to show you for the Dow Jones Industrial Average is if you look here at FASTO, it's below 20. Generally, when it gets down in this zone, this is where it bounces. You could see down here that was a bounce. This was a bounce zone, bounce zone, bounce. It bounced right here, and now it's down here below 20 again. So this is technically where it tends to bounce off of off of FASTO. Now RSI at 36, it still hasn't hit 30 yet. On big corrections, it comes down and hits that 30 level. If RSI hits 30 for the Dow Jones Industrial Average, that should be a technical bounce signal. Okay, so it's over. It's hitting levels on FASTO where it typically bounces. Yeah, so we'll see if it can do that. Now with the S&P 500, you have this similar type of situation here where it's down here at the hitting the 20 level, the bounce level. It bounced right here, and then it bounced down here when it got to these levels on FASTO. When it had a prolonged pullback there back in March. When it was trading sideways down there, it stayed below 20. But this is signaling that it's oversold. And so if you look here, it's hitting the 50 and 100-day simple moving averages. That 2702 is the big level to hold. It bounced off that level in the middle or the lower Bollinger Band. That's the purple line. That's the bottom of this. It's bouncing off of the lower Bollinger Band. If that level were to break and it dropped below that 50 and 100-day simple moving average, that would be a major red flag. That's when the 200-day simple moving average would likely be tested. Back here in April on the pullback and in May on the pullback, the red line, the 200-day simple moving average was tested. And so it's all about holding the green, the 50 and 100-day simple moving averages. If those hold, this is where it could get a bounce. Now if it dropped below, then you're looking at 2664 on deck. The close below the middle Bollinger Band today was a red flag. It was trying to hold that level last week, and so dropping below signals downside risk. If you look at the SPY, the spider S&P 500, similar situation with FASTO down here at 20 now. It's bouncing off of the 50 and 100-day simple moving averages. If that 268.50 level fails to hold, then you could see it drop and retest that 200-day simple moving average. As you can see, that happened back there in that April drop and then in the May drop, and so that would likely be the target. Right now, it's looking like this May pullback, where it pulled back below the middle Bollinger Band, and so if it holds this level, then it could remain bullish. You're going to know whether or not there's more downside risk if this green line holds that 270.39 level. If there's a drop below that level tomorrow, that's going to be a major red flag. Okay, look at SPXS. This is the DJIA on daily S&P 500 bear 3 times. So it's been on this nice move off of the lows, off this 2450 zone. It's been working its way higher, trying to get above this middle Bollinger Band. It finally did today, currently at 25.49, and so that was a bullish close above that level. It hit the 50-day simple moving average at 26.74 and failed to stay above that level and pulled back. If you see a break above that level tomorrow, that's going to be the big signal that wants to head higher, and then the next resistance level is going to be that 100-day simple moving average at 27.57. You could see here back in May, it topped out at that 100-day simple moving average, so that's going to be a big level to break. So yeah, keep an eye on it for a possible break above 26.74. If you look at the DJIA on daily S&P 500 bull 3 times here, this is if the market does bounce, then this will heat up, and so you can see here it got the short cover rally into the close today. This is the 15-minute chart. If it can stay above 44.10, then it could get a reversal going. If it drops below 44.10, that's going to signal the bears are still in control, and SPXS is still the way to go. Once the market finds a bottom here, the S&P 500 finds a bottom, SPXL should heat up. Now it could just get a rally between 44 here and the 50 simple moving average at 45.37. Both those levels need to turn into support for a real reversal to take place. Okay, let's look at the technology stocks here real quick. The technology sector, QQQ here, it closed down 2.25%. 20%. Now you have FASTO hitting 19. So this is really hitting the oversold, temporarily oversold level for FASTO. It's down 3 days in a row. The drop below the middle Bollinger Band is a major red flag. You know, 174 turns into resistance. That's going to signal a possible start of a new downtrend. Just below here is the 50-day simple moving average in the lower Bollinger Band, and this 169 support zone needs to hold. If that broke, you have the 100-day simple moving average at 166 here. So this is a big signal that the technology sector is cooling down. Look at the huge volume bar here. We're going to see here if a new downtrend starts. If the middle Bollinger Band turns into resistance, that's going to be your big clue. There was MACD bear crosses down here, signals of the start of a downtrend, and also you have the P-SAR bear flip. The green dots are above the candles. SAR stands for stop and reverse. So it's just a signal that this uptrend is finally breaking down, and so we have to see if it's going to be more sustained. Okay, if you look at SQQQ, this has been returning nice gains here the last 3 days. It's been on this nice rally with a huge move today. Look at that giant volume bar. It closed above the middle Bollinger Band. So if that 1380 level, 1379 turns into support, a new uptrend could begin. The last close above the middle Bollinger Band was way back here on the 25th of April, and so this is a bullish change in trend for the bear ETF. Okay, so this is this goes up when the technology stocks go down, and so if this middle Bollinger Band turns into support, the 50-day simple moving average at 1526 will be the next key level to break. And so if all the tech stocks are still under pressure, this could return some nice gains. Now, if it drops below that middle Bollinger Band, that will make it a risk to hold, and that would put TQQQ into play. Take a look at this. This was punished today. Obviously, put options were delivering big gains today on this ticker symbol. It got below the middle Bollinger Band. That's signaling possible start of a new downtrend. This is a similar chart to the QQQ, right? It's hitting the 50-day simple moving average in the lower Bollinger Band. If it can hold this 55 support zone, this is where it could get a bounce. Now, if that breaks, you have that 100-day simple moving average at 573, at 53.73. That has to hold. This is a major red flag. The last close, below the middle Bollinger Band was down here, and then it's been an uptrend for several weeks, and so this is a bearish change in trend. This could be the start of a bigger pullback. You also have the volume spike down here, so we'll have to see if but it's also hitting key support, and if it's going to bounce, this would be following a multi-day pullback. This would be an ideal level to bounce off. So we'll see if it can bounce off this 54 to 55 level. It was heating up into the close here. This is TQQQ on the 15-minute chart. It got above that middle Bollinger Band at 56.50. If that level holds, that signals it could get a reversal going. If it drops below 56.50, it's going to signal downside risk. It would look for a potential run up to that 50 simple moving average at 59 if that 56.50 level holds. All right, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. All right, thank you.